All right, let's get started. Thank you for joining us today for this special virtual event with Drivepoint. Drivepoint is the strategic finance platform for scaling consumer brands, and we're excited to share some of our expertise and experience with all the beauty brand operators joining us today. We have a great session planned, packed with strategies you can put into action right away as you prep for Q4. By way of introduction, my name is Alex Hoimes, and I recently joined Drivepoint as VP of Finance and Ops. A little background on me: I started my career at Citibank in tech investment banking, where I worked across technology sectors and industry products, covering deals in M&A, debt, and equity. I learned a lot during this time, but it also taught me a lot about what I didn't know. So after 3 years, I wanted to join a company to get real operating experience, which led me to join IPSY in 2017 as the first hire on the finance team. I spent 6 years at IPSY helping grow the company into the world's largest beauty subscription business with over $1 billion in revenue and over 4 million monthly subscribers. At IPSY, I led a variety of financial functions. So initially FP&A, as we built out a lot of core finance functionality and foundation, and eventually strategy, corp dev, and most recently special projects, which someone recently told me is what you do right before you leave a company, and I guess they were right. Anyway, it was an awesome journey, and a few highlights from my time there include rebuilding our subscriber model, which actually resulted in us making more money, going through a price change analysis with Simon Kucher, who are basically fancy overpriced consultants that do pricing for Amazon Prime and Netflix and a lot of the premier subscription companies in the world. And then I led our acquisition of BoxyCharm, our IPO process, and various new business launches, including international expansion. But most importantly, I got to meet Amina, who I would love to introduce you all to. So Amina is a legit beauty industry expert, possibly unlike myself, and that is super well connected and has experience building some iconic brands from various leadership roles. Amina has worked very closely with finance and numbers and analysis throughout her career, and including during our time together at IPSY. And I'm sure will keep me in check during this presentation if I get into any financy rabbit holes and provide great perspective. I'm also excited to do a sneak peek announcement, sort of a soft launch of Amina joining Drivepoint as an operational advisor, where she'll be available to support our beauty customers as well as our customers in other industries with executive advice and counsel. So we'll be announcing this more formally soon. But Amina, thank you so much for joining us, and we'd love to hear more about you and your background.
Thank you, Alex. And what a delight it has been to work with you previously and again now. Hi, all. It's such a pleasure to join Alex and Drivepoint with our presentation today. Thank you so much for joining. Quick background on me. I've been in the beauty biz, I'm going to date myself here, 18 years, focusing on the commercial side of the business, including merchandising, brand management, brand development, marketing, education, operations, inventory planning, and even launching retail stores. I started my career with Bare Essentials, which is now been rebranded as Bare Minerals. In the early days, working various channels, including overseeing Sephora and Ulta, so the specialty channel. And then I moved to working with Perricone MD, which is a luxury skincare brand, the Estee Lauder companies, including working with about 15 plus brands, such as Clinique, Estee Lauder, Smashbox, Bumble and Bumble, and many more, on how to navigate the specialty channel. I was then lucky enough to work at Kendo, setting up their international business and oversaw their international business and the commercial need as well as the P&L, including working with Fenty Beauty, Marc Jacobs Beauty, Ole Henriksen, and others. After Kendo, I did some consulting where I was able to work with a number of private equity firms to help them vet out new brand acquisitions. I'm very much, again, specifically reviewing the P&L projections and looking at their sort of projected growth over a 5-year period and break-even analysis. So definitely digging into the financials and operations. I then joined the Morphe team, overseeing 9 functional areas within the retail world. So I owned the retail stores, including opening and managing 50 stores that drew opening crowds of 5,000 to 21,000. I then joined IPSY and BoxyCharm, which is where I met Alex. And I oversaw merchandising, the planning function, personalization function, and brand partnerships, working with about 1,500 plus brands, where I was definitely very engaged and working closely with the challenges that they had operationally from an inventory perspective, and of course, always really wanting to serve up a healthy business in partnership with these brands. So in short, I've worked with big brands, small brands, brands in different stages of development, including startup. I've had the great experience of being able to look at their P&Ls and really understand the ins and outs of their business. I've also worked with different categories, geographies, and functions. So in every role, it was critical to the commercial success of the organization to create the right financial analysis and garner real-time information in terms of sales, revenue, inventory, cash flow, and EBITDA. I don't want to tell you how many times I personally created financial models, which PS, I love to review, but it's not my favorite thing to create from scratch. But how many times I created these models to ensure that I could understand the needs of the business and ultimately make the right decisions for the company. So I'm personally thrilled to have joined the Drivepoint team as a strategic advisor, because I know firsthand the challenges that you all face. And I love that there's finally an innovative tool to help business owners make the right, timely, cost-effective decisions to ensure the health and viability of the business. Information is power, as we know, and Drivepoint really delivers the critical information that you need in real time. Thank you, Alex.
Thank you, Amina. Thank you very much. So here's a quick overview of what you can expect in today's session. First, we'll talk a bit about why we're all here in the first place. So Q4 is just around the corner, and it's one of the most critical times for planning at growing beauty brands. Next, we'll quickly level set about what strategic finance is and why it's important. Then we'll spend the bulk of our time diving into some tangible ways that you can get ready financially for a successful Q4 and beyond. We'll cover strategies around ad spending, discounting, and Q5, which we'll talk more about later, but for those that don't know, is also known as the hidden quarter. And we'll try to make all of this as relatable as possible by using practical examples and anecdotes, along with a template, which will be available for you after today's session. And finally, we really want to hear from you and answer any specific questions you have. Amina and I will try to answer all the questions that you write into the chat during the call, but please write stuff in. We'd like to make this as custom as possible. Also, at the end of today's session, we have a special opportunity to offer everyone here today, so be sure to stick around for that. And with that, cool, let's get into it. And first of all, we're very excited about the awesome turnout that we've had on the call with some great brands and retailers joining us today. But why are we all here? Like I said, Q4 is around the corner, which can be by far sort of the biggest and most impactful quarter for many beauty brands when planned and executed correctly. So we want to help make sure that you have all of the financial and analytical horsepower needed to make that happen. And we have guests, from what I've seen, from different functions and companies and in different stages of their growth with us here today. So I wanted to quickly provide some context on why finance is so important and why all successful companies invest so much in this function. So I wanted to share this cool and very, very inspirational quote that I found by typing FP&A quotes into Google. But finance without strategy is just numbers, and strategy without finance is just dreaming. But honestly, it does ring true. All companies need to have a strategic vision and roadmap, and this needs to translate to a financial plan and actionable goals and KPIs to achieve it. But setting this plan requires thought, research, analysis, and as anyone who has been through this knows, lots of iteration and pivoting. So I thought this image on the right was actually very interesting. Ultimately, FP&A's most important job is to sit at the intersection of strategy and leadership of the company, business leaders and data, and liaise between these parties and put together an achievable plan that ladders up to that vision and sets the business up for success. So with that, Q4 is 25 days away. This is a critical time for all businesses, but especially those in the consumer space that have a seasonal, holiday aspect to their business. Q4 is a period of heightened demand and consumer attention. So it's a moment to really plan how you want to take advantage of that opportunity, but it's also a natural moment to step back and prepare for next year. First, you're already in planning and analysis mode. And second, how you perform during this period will set the stage for next year in terms of like velocity, the most recent cohorts that you've added, and how they're going to impact, your next year's performance, your ending year inventory position, et cetera. So today, we're going to focus specifically on strategy around the levers of ad spend, discounting, and Q5, which again is also known as the hidden quarter, to think about how you can set your business up for success. And then we're going to use this example company called Alexology. And this is two of our customers at Drivepoint are Curology and Geology. So it's a little joke on the ologies. This will be my ology. And basically the company, sort of just a high level profile to level set, is, in 2023, they had 16 million of revenue. They're growing very fast. They were founded recently in 2019. They're just kind of crossing over that precipice of becoming profitable, still distributing mostly through DTC and looking to expand in the near future into wholesale. So we'll use Alexology. And so, sorry to hit you with this wall of numbers, and hopefully Amina can sort of pull me out of this in a little bit and soon and make this a bit more relevant. But just let me explain what we're looking at here first. So this table represents possible increases of ad spend and discounts in Q4. So the bottom right would be the maximum increase in ad spend and discount, and the top left would be the maximum decrease of ad spend and discount. So the $0 right in the middle of that table, that's the current plan of spending 1.5 million in marketing, in ad spend, and then just over $1 million in discounts. So as we think about each of these levers, it's worth pointing out that they're actually quite similar financially. Discounts, decrease your net revenue, and ad spend decreases your contribution profit. Also in this example, we're going to assume that the benefit that we get from each of these levers is that they decrease your customer acquisition cost. But as we think about how we can be as effective and strategic as possible with the limited precious dollars and margin that we have, how should we think about which of these levers may make more sense to pull here? So marketing is going to bring more new customers in, which, depending on your payback period, is likely going to cost more money in the near term because you're spending the money from them and they're probably not going to pay back in the exact same quarter. But it's going to have greater positive effects next year and in future periods. So whereas discounts are probably going to increase conversion for all of your customers if you're running the discount for all of your customers. However, discounting, as Amina I think could tell you, is going to be more impactful in other ways, and a lever that you want to be careful using too much because of its impact on your brand and brand equity. So as you think about fourth quarter profitability and impacts to next year, it's important to model out how each of these scenarios will play out for your business, with your business's own dynamics at play. Amina, do you have anything on this slide? What do you think?
Yeah, thank you for bringing up the discounting thing. It's always a bit of a quandary because you want to move through your inventory, you want to garner the sales and traffic, excitement, but you want to protect your brand equity. At the same time, there are other considerations like moving through your inventory at the end of the year. If you can do that, it might be meaningful. but ultimately also looking at your EBITDA and understanding how is the discounting ultimately impacting your profitability. So these are all elements that every company needs to look at. And I think every scenario is different. However, if you have the data at your fingertips and it's in real time, you can make the best possible decisions for your company based on the priorities you have. So as an example, if you're trying to move through, excess inventory that might actually expire, that would be a reason to potentially discount that merch and take a little bit of a hit on EBITDA in the year you're in versus carrying it over the next year and kind of being stuck with it longer. That obviously impacts your cash flow as well. So these are very real scenarios that we've all dealt with in fourth quarter. And I think the element that Drivepoint really gives as this added benefit is giving you a dashboard where you can really analyze in real time what's happening to the business and make those decisions as an executive team to ensure that you're really delivering the priorities for the company.
Yeah, completely. So what's happening on this slide is basically a 30% increase in ad spend or discounts will have a different impact for different businesses, depending on things like, have you discounted before or do you do it frequently? What's your price point and your target customer? What's your ad strategy? How diversified and saturated are you across your channels? And what historical data do you have for each of these levers that you can look at to help understand their sensitivity? So in our example, what we're saying is for a 30% increase in ad spend, that's going to have a 7.5% increase in your CAC. And then, for a 30% increase in discounting, that's going to have a 15% decrease to your CAC. And so that would you see this net CAC change below. That's kind of the sum of the two impacts above. But this is a place where I think everyone needs to sort of really look at their own business to understand, all those factors that I mentioned. And so basically, if you think about it simply, on the right is kind of your growth at all costs play, and on the left is sort of your prioritized near-term profitability. So probably it's gonna have a better near-term P&L impact. But as you look at future periods, you didn't make that marketing investment, so your cohorts are smaller. So in future periods, you're gonna have less people that are contributing in the rest of their sort of life cycle with you.
Yeah, and may if I add, Alex, so we all know this. We've been in fourth quarter. We have a budget we have to hit. We're actually building out the budget for the next year, always on where we forecast we're going to land for the year. So really narrowing the gap of, any kind of variance to what you have planned is critical, not just because you want to deliver your plan, of course, but also because your new budget for the next year is built on the budget that you have for this year. And so to the extent that you can really deliver or over deliver for fourth quarter, obviously such a critical time. And you all know this, the madness of having to redo your budget because things didn't land anywhere near where you thought they would. So I think, again, having timely information that really delivers on these various decision points is so critical. And we all know also there are times where we just want to take a hit on a discount, move that excess inventory, capture a new consumer potentially, and it makes sense. But being able to weigh the pros and cons of that is so important, particularly for an executive team to make those decisions. So you land the year exactly where you want, or at least close. It's never perfect. And then you don't have to redo your budget for the following year. So again, you have this information at your fingertips and you're really able to adjust as you need based on the priorities of your particular brand.
Yeah, totally. Yeah, it's when you have it clearly in front of you and you can see, okay, look, we're ahead on our EBITDA plan, or we're beating budget. It makes it a lot easier to say, let's set ourselves up for a really successful next year, and let's allocate that incremental EBITDA we have into an investment in the fourth quarter of this year, whether that be marketing or something else, so that you're setting yourself up in a much better position going into the next year with recent cohorts added and sort of more velocity. And I think one other thing on the inventory front is, it's good to move through your inventory. I think, I would imagine Amina has perspective on this, but sometimes especially I'm guilty of this, you're looking at things purely financially. But, when you have too much of an inventory glut and or you're protecting your margin in the current year and you say, look, I don't want to discount. If that's what it takes to move through the inventory, I don't want to do that. So, you don't discount, you keep the inventory and you hope to sell it at like a better margin in future periods. You can end up in a place where you're sort of susceptible to sales slowing down or inventory expiring or other issues, and then you sort of put yourself in a position where it's even worse than moving through your inventory in the current period with potentially a bit more cost associated with it, whether that be discounting or marketing.
Yeah, I mean, this is the one time of the year, and we all know this, that everybody is super, super aggressive. And you see brands that never discount, especially in the beauty space, actually go there, in December. And so most of the companies I've worked with, we have kind of a cadence projected of, all right, week by week, we're going to check, or day by day, we're going to check to see what is our performance and what decisions do we want to make? Because ultimately, you have a certain amount of resource to either spend on marketing, promo, discounting, how do you want to spend it? And I think where Drivepoint really provides a great tool and visibility is it helps make those decisions that are so critical, because you miss them and the competition takes over, you've missed that opportunity. And with newness, particularly around holiday newness, that can be a challenge, because if you don't move that seasonal merch, you're stuck with it. And then you have to discount it at some point, or you have to find other ways to move it. There is a flip side perspective to discounting, which is also, hey, we're going to do it this one period of time, one time a year, or even a lower price point for merch that you can move through faster. You're pricing it aggressively because you're going to capture a potential new consumer. So there are all these various elements that every brand has to consider when it comes to discounting. It's not always a terrible thing. It can be a really strategic element during fourth quarter. But again, being able to weigh your options and really be able to deliver on the right decision is so critical. And this is where the dashboard that Drivepoint offers really gives you that real-time information to make the right choices for your company.
Yeah. Get to update your model every day with daily data by clicking a button. So here's sort of the net impact of this analysis. So on the left, you have your scenarios with lower ad spend and lower discounting, which, as you'd expect, would result in lower revenue, contribution profit, but higher EBITDA and ending cash, given the lower marketing spend. You'd also have a higher ending inventory balance in this scenario, as you've had less sales. So basically, if you looked at ROI in this quarter, or in this, in this scenario, like that, it would look the best here. But it's not taking into account, like I kind of alluded to before, it's not taking into account the future contribution of the cohorts that you're bringing in through that marketing investment right now, which might tell a different story. So yeah, same thing we were discussing before, but this is kind of the output of it all. So
may I just jump in, Alex? So I think if
for
there are questions specific to your the last couple slides, it'd be great to address those during the Q&A. So if anyone in the audience has a question, tuck that in. We can always come back and display these slides and kind of walk through them if you have further questions about it.
Yeah, I know we went into there's a lot of numbers on the screen here, but I think hopefully we can discuss these concepts more conceptually to the extent you have questions. If anyone wants to dig into the numbers, we're always happy to do that as well. So Q5, which we've mentioned a couple of times, the hidden quarter. Basically, as I think almost everyone knows, things never go to plan, and so what we did a lot at IPSY, and what you can do is use Q5 to help adjust for mistakes. Q5 is the period basically from Christmas Day through January, where CACs are often lower due to lower competition. So spend can be more effective. And if you have a large inventory position or want to add customers going into 2024, it can be a really good time to do so. Um, so yeah. And for all these, for all these periods, you do really want to be ready to make decisions really fast. So, like Amina has been mentioning, being prepared, having model updated, being able to update it really quickly with the latest data is really critical for success. At IPSY, we were a subscription business, so Q4 was a little different for us. But Amina, you've mentioned to me in the past that a lot of the brands you've worked at, you guys are looking at daily data and updating everything daily, which without technology and a tool to help is really quite a heavy lift to update things every day and sort of refresh your view and figure out how you want to hit your plan.
And Alex, if I may just jump in, I think Q5 is not necessarily a term that everyone's comfortable with or familiar with, but I think we all know that following sort of that, December holiday, the minute Christmas passes, people are surging back out there with gift cards, and they're actually out and about usually. I mean, COVID outstanding, to go shopping and buy things for themselves and for others. And traditionally in beauty retailers, there are new exciting launches that happen in this sort of Q5 because there's such a surge in traffic and excitement and curiosity, and people actually have a little bit of money to spend from the holiday. So it is a really critical time to take advantage of, particularly from an ad spend perspective, when there isn't as much clutter as Q4. One of the greatest challenges about Q4 in advertising is kind of lost with everything else, and it is expensive. So this Q5 is a really interesting strategic period, not just from a promo and discounting perspective necessarily, but also potentially introducing newness, which is again what you see in Sephora or in Ulta. There's a reason to go back into the store, or there's a reason to go back online with your DTC because there's something exciting and new. And that carrot then can drive you to purchase other things, build your basket. So it's a really important quarter to think about and be strategic about, because it can be really meaningful to the bottom line.
Yeah. Yeah, and this was another place where at IPSY, we often would look at our financial plan and see, if we were trending ahead from a profitability perspective, it was a really great opportunity and we would often not even include January. We would just take the last days of December so that from an annual P&L perspective, if we had sort of $1 million or a couple $1 million of EBITDA to use, we would put it into the last week of December and get really efficient conversion and low CAC and bring a lot of new subscribers in. So, there's also the January period, but you can also just look at the last days of December and still sort of stay within like that year's budget or that year's plan.
Yeah, and I would say, Alex, this Q5 does for many companies carry into January.
Totally.
At least the first 2 weeks. Yeah.
Yeah. So yeah, like we, mentioned earlier, Q4 and Q5 are critical periods that are natural moments when you should already be focused on planning. And they inform the following year's plan. As they're critical in determining your end of year inventory levels, your Q4 customer cohorts, sort of just the general velocity of the business and when people have interacted with your company most recently. And even to the extent that you're sort of using Q5 into January, they're actually impacting your next year's financials and performance as well. So it's really a natural time to be thinking about budgeting for the next year. A lot of your budget's going to be informed by it. You're sort of already working on these things. So I would urge, I guess, people on the call, depending on what function you're in, to look at this as a period to focus on next year, as that's sort of a natural extension. So I guess let's sum things up a little bit. At a growing beauty brand, Q4 can not only make or break your year for sales, but it can also set in motion a good or not so good trajectory for next year, depending on how you navigate this critical planning period. There's honestly so much we didn't cover today, but the three topics we covered, ad spend, discounting, and Q5 are a great place to start when planning for the upcoming quarter. With ad spend, I encourage you to do some analysis, just, how hard your marketing dollars can work, because this is one of the most powerful levers at your disposal to drive growth and inform your financial decisions. With discounting, try doing some scenario analysis and looking at previous discounting data to see how different levels and timing of discounts have impacted your most important finance KPIs. And then thinking about Q5, make a plan to take advantage of this unique period so that you're ready to sort of react quickly to the data and maximize your growth for the current year as well as your growth plan for the year ahead. At the end of the day, navigating decisions around these finance levers just takes some work. It's not wizardry, but with the right tools and data setup, the work and the decision making both become easier and easier over time. With that in mind, I want to hand it over to Amina for a very quick overview of Drivepoint before we share our special offer for everyone on the call today and dive into some Q&A.
Awesome. And Alex, before we go to the next slide, maybe Mike, you can go back. I think this Q5 time is so incredibly critical, and having a plan, and you probably all know this, but having a plan and laying it out literally week by week, and some brands might want it day by day, where you have a tiger team, you've got marketing represented, you've got finance represented, you've got the commercial side represented, merchandising, everybody's on board with, okay, we're trying to hit these certain thresholds, and if we don't hit it, what are we going to do? And having that plan in advance is so incredibly beneficial because you can figure out these different thresholds, right? Nobody wants to go in immediately with a 50% discount on anything. But the reality is, if you aren't competing and the marketplace is competing heavier, they're going to get the lion's share of the business. So it's really, really important to have your exact plan laid out and to have a core, as I mentioned, sort of like a tiger team that can make these critical decisions quickly and decide, okay, we're going to push a little harder on ad spend, or we're going to remove our ad spend dollars, and instead we're going to discount a little bit heavier. And this is the new threshold we're going to hit. I think having this strategic plan is so critical, being aware of what you need to do and what the thresholds are and the timing that you have and whatever your checkpoints are. I think weekly does tend to work well, but there are certain points where you may want to actually check in daily. And ultimately, Drivepoint, again, gives you that dashboard in real time on a daily basis that will allow your team to make strategic decisions, which frankly, a week might be too late. So I think in many cases, if something's going awry, you're going to want to meet daily and look at the data and figure out what are we going to do, and so I think this is where this, it's not just Q5, it's really Q4, figuring out what you're going to do during that period. It's really Black Friday on, and ensuring that you've got the right data to make the right decisions, and that you've got a plan for how you're going to handle it. Again, this program will provide the data, but I think also setting up a strategic plan to ensure that you've got the right people and the right strategy is also incredibly meaningful. This is probably all things but a good reminder. And I think where Drivepoint really provides this kind of leg up is giving you the dashboard of data in real time that you need. So in a nutshell, Drivepoint offers a strategic finance platform for scaling brands, but for any brand, frankly. And I see it as a secret weapon. So some of the key points of difference: 100% focused on consumer brands. So the team is always looking to specifically cater to your needs. It's 100% built for consumer brands, like the companies that are all participating here. And we're not focused on software business or service business. This is very much specific to what you're doing. So they've really we've honed in to truly understand the unique dynamics of a growing consumer brand. So I think that's really, really important. Two, you don't need any fancy software to plug this in. This is very much plug and play. Delivers a modern data stack with native Excel interface. So we can use your Excel that you're already working on and be able to plug that in pretty quickly and easily. So it's really efficient for you, simple and straightforward, not difficult to enable the software. And then lastly, I think it's really important to acknowledge the service level. Any partnership that we sign on includes a team of analysts assigned to support you with your needs. If you have any questions, you have any challenges, real time, you're having difficulty, there's a group that can help you address those needs. All right, next slide. So, really what Drivepoint is offering is a modern tech-enabled, AKA AI, strategic finance interface. And so there are two key areas here. One is to eliminate and streamline manual processes, which I know we all feel it. Like when we're dealing with multiple spreadsheets and trying to combine them, it's one, inefficient, but also it opens up room for error. And I know we've all dealt with this. It's incredibly challenging. So what Drivepoint's able to do is really connect the models, the data sources in a very quick time. So you have it in the timely manner that you need. It allows for streamlining of reporting and dashboards. So you've got a really simple, clear, clean dashboard where you have the data that you need. And it automates forecasting elements, which frankly can be very time consuming and riddled with potential challenges and errors, especially when you're dealing with multiple data sources and documents and teams. So I think this is one key area where Drivepoint really can enable a business. And then the second is, unlocking growth, profit, cash flow. There's this amazing forecast accuracy that the company can provide because you're actually seeing these key data points that you need in real time. So you can make the right decision for your business. And fourth quarter, as we know, the needs of the business can change rapidly. The dynamics of the competition can change rapidly. The economy and various elements. So with Drivepoint, you have the information you need to make the best decisions possible for the quarter in real time, and also ultimately impact the start of the following year, which is obviously so critical because many companies are doing their budgets, trying to land a budget for 2024. And so, as we talked about already, you may want to spend a little bit more or maybe a little less on your ads. You would figure out what stages you want to discount, when you want to go a little deeper, and see how those decisions ultimately impact your inventory, your cash flow, and your EBITDA, while also retaining your brand equity. So I think these are, really, really important points. It allows you for a better sort of decision structure and support for your various scenario analysis. As I mentioned, really, recommending kind of a tiger team to look at the data and figure out in real time what's right for the business, and giving you those advanced analytics. And ultimately, greater forecast accuracy, which I think we all kind of chase. But going back to what I said earlier, we know information is power, and having that information at your fingertips on a daily basis is so incredibly critical and beneficial.
Yep. And this is actually really just quickly why I joined Drivepoint, is I spent 6 years doing this at IPSY. If we had had this tool, it would have made our lives much easier. And maybe I would have been out of a job also. But I just want to remind everyone, please submit any questions you have using the Q&A button on your Zoom toolbar. Yeah, basically, overall, there's a ton to the Drivepoint platform. Thank you, Mina, for going over all of that. But before we go into our Q&A, this is a good segue to the special offer that I mentioned before. So for everyone that has stuck with us, we're offering a 1 hour one-on-one strategy call with our Drivepoint team, completely free. We can talk through all of your top strategic finance questions as beauty brand operators and what's keeping you up at night heading into Q4. All you have to do is comment, let's talk in the chat function, and we'll follow up with you and find time to talk. And one cool thing I should mention is that we can work with you to connect your QuickBooks and Shopify ahead of time. So that way we can quickly stand up a financial model and some dashboarding for your company to make a consultation as effective and helpful as possible. So I encourage everyone to take advantage. And now it's time for some Q&A. So thanks to everyone who sent in questions ahead of time. We'll start with some of those. And then if you'd like to ask a question now, please submit it just using that Q&A button at the bottom of your screen that I mentioned.
Awesome. Should I go ahead and start, Alex?
Yeah, that'd be great.
Great. So as Alex mentioned, if you have any questions, please put them in the chat or share them. Obviously, if you have questions afterwards, you can reach out to any of us. We're very happy to support you with those questions. And I really encourage and invite you, if you have any interest, to set up this hour-long chat with the team to see whether or not we can help support you with your specific needs. All right, so I have some of the questions here. It looks like I've got at least 3 here that I'm personally going to answer, but please share any other questions, and maybe Alex can join me in some of the Q&A. All right, and please also remember, as Alex did the demo, if you have questions about that demo, we can flash those slides back up and take a look together while we answer any questions. So the first question we have is, in your experience, what are some of the most common mistakes beauty brands make in fourth quarter? I have been around the block quite a bit on this one with my 18 plus years in beauty. I think the biggest mistake is in and around discounting. Too much discounting without needing to do so, and perhaps not enough discounting to optimize the marketplace and landing with a ton of excess inventory, which is a bit of a challenge to move through, whether it's on your own site or actually in retail stores. Overspending on ads is also potentially a pitfall because it's a very, very noisy time during the holiday to make any kind of message heard. And so you're spending a lot. You may actually not get the return on your investments. It's a really, really challenging time, and being thoughtful about how you spend and where you spend is really, really critical because there's just so much activity at this time. And then, as I mentioned earlier, we all have a set amount of money or resource to spend, and the decisions we make fully impact the EBITDA, the cash flow, the inventory ownership, and ultimately the performance then impacts the budget that you have for the next year. So it's really, really critical to land the right choices for your company during this period of time. And ideally optimize on all the traffic that's out there, shopping online, shopping in store. So you want to be thoughtful. Discounting is maybe not so terrible during fourth quarter because you can capture a new consumer or potentially have a consumer purchase an item maybe for themselves and maybe for someone else. And so, for the first time, you may be able to capture a new customer. And I think that is not irrelevant. It is important. So there are different ways to look at it depending on your brand equity, what you're really looking to deliver, how much inventory you purchase, and your channels of distribution. But I would say those are some of the common mistakes: overly discounting before you need to, not enough discounting and letting the competition sort of eat your lunch, landing with a bunch of excess inventory, and maybe overspending or spending on ads that don't actually resonate because there's so much noise during this period of time. All right. The second question I have here is, do you have any specific strategies for forecasting inventory needs for more seasonal products? I want to avoid stockouts, and on the flip side, want to avoid having to mark down too much excess inventory down the road. I think this is an excellent question. I think one of the things that a lot of people don't recognize is about 60% of the volume, 60 plus, of what happens during the holiday and fourth quarter is actually core merch. It's not actually seasonal stuff, but of course, we know we're all creating seasonal products, and it is a bit of a risk because if you don't move it through quickly enough, it can feel dated. You could deal with, returns from your retail partners. There are a lot of things to consider here. So it is really important to nail this. I think my biggest tip is building out a promo strategy for fourth quarter and having these timely meetings with the Tiger team, as I mentioned earlier, so that various thresholds can be evaluated with your newness to ensure you're making the right decisions in terms of promoting or discounting or whatever you're doing. And this is where, having a company like Drivepoint be your secret weapon really helps, because we're providing this timely information in a critical way on a daily basis, so that your team can make the right decisions during this very fast, intense period. And then it looks like I have one more question here, unless we get more, which please go ahead and share any questions you might have. This one is, what strategies have you seen work well beside discounting to move old inventory and make room for new products going into quarter 4? I will say this one is near and dear to my heart because at IPSY, we acquired our competition, BoxyCharm, and that propelled us to be, amongst other wonderful things, to be $1 billion plus company. But we did inherit a lot of inventory. And so moving through it was a bit challenging. You had to get clever and creative. And of course, we didn't want the brand to be perceived as a discounted brand. So it is, of course, very tricky and specific to quarter 4 for sure. I think that to answer the question of various marketing and promo levers, where you can tell stories, get your share of attention, whether it be social media or marketing, advertising, various ways, but really telling a unique story that sticks and resonates with the consumer is very, very important. If you have exclusives, really leaning in on the fact that it's exclusive, you can't get it anywhere else, is very, very meaningful. And ultimately shining the light on value or excitement, something that feels very meaningful, differentiated, and unique to your brand is so important, because that allows you to cut through with the messaging, even if it's not discounting. It's a very special product, unique, get it while it's gone. It could mean more ad spend on those items. I love to focus on scarcity sometimes, like get it before it's gone. I also really love to bundle products into exclusive sets. So you take excess inventory, or you can take existing merch, whatever you want to do, but put it into sort of sets. So you're adding, yes, it's a higher price point, but you give a little bit of a discount on that, or a value, as we like to call it in beauty. We don't call it a discount. And so by doing so, 1, you offer exclusivity, and 2, you offer a value that you can't get anywhere else. And so this is something that's very meaningful, that as you're thinking about your marketing or your promos or how you're advocating for your brand, you really lean on elements that feel very exciting, enticing, and provide value and exclusivity. Last chance offers at the end of the year, sort of the scarcity element, like get it before it's gone, can be really meaningful. Yes, a discounted message can also help, sort of the get it before it's gone. And then, as I mentioned earlier, as you lean into quarter 5, like immediately after Christmas, essentially, for that next 3 weeks, it can be very beneficial to get consumers to your website, to the stores, by offering something that's new that wasn't available previously. You can market that, you can get excited about it, you do not need to discount it. However, if you have something like this, it draws people in as a sort of a carrot that gets them excited. And then you have something to talk about that feels fresh and new. You can possibly get media exposure around it. And then ultimately, if you draw them into your site, or you draw them into a fixture in a retail store, they will potentially also purchase other items that you're trying to move. So building the basket with other items that you're trying to move quickly from an inventory perspective. So it's kind of a win-win from that POV, but it does require that your team create something new and fresh for the kind of the day after, for that quarter 5. So you're really taking advantage of the traffic that's either on the internet or in stores, and bring them in with something exciting and new, and then market that effectively, and move through other excess items while you're at it. I found that those are very beneficial strategies outside of just sort of plain discounting that can get you to move through inventory, make new products at the end of, make room for new products getting out of quarter 4. All right, do we have any other questions?
We're getting thank you to everyone. We're getting a lot of let's talks in the chat, so that's exciting, and we're excited to follow up with everyone. And Amina, I haven't been slacking off over here. We've gotten some other written questions in the Zoom chat, which I've been answering over typing here. But I don't think there are any other questions to answer live right now. So I think we can give everyone 10 minutes back. But Amina, thank you so much for joining us today. And most importantly, thank you to everyone in the audience. We hope you've found this event to be valuable, and please reach out with any questions. We'd love to help, and look forward to connecting with everyone soon.
And Alex, if I can just add 2 points, I think, or 1 point. I'm here specifically because I've been in your shoes. I've had all the challenges that you've had. I've tried to build the models myself. I've seen cross-functional teams trying to gather up a bunch of spreadsheets and the errors that sometimes happen in the frenzy of trying to do that. And so, really believe that Drivepoint does offer the solution that provides efficiency, this ability to avoid sort of the human error, and a really smart, strategic, innovative solution that, frankly, I wish I had found years ago. So I personally am very excited about this and what it can offer you in terms of the benefit to your business and being able to make the right decisions for your company in real time.
Yep. Thank you, Mina.
All right. Awesome. Thank you all for joining. Please take us up on that hour-long opportunity to connect, and we hope to get to talk to you soon. And good luck with fourth quarter.
Have a great day, everyone.
Bye. Take care.